Good evening, everyone, and welcome to this exciting and short webinar on Controller to FP&A. Controller roles, as we know, are pretty much focused on compliance, whereas FP&A is focused on commercial stuff and performance management. So in this session, we'll try and understand about both the worlds, the controller world and the FP&A world, what CFOs are thinking about FP&A, and why FP&A is gaining so much of prominence, and how can you transition into an FP&A role or a high-paying FP&A role. So these are the things that we will be discussing today. For the next 60 minutes or so, get rid of all the distractions. We'll try and cover as much practical ground as possible. We'll try and discuss as many things as possible about both these worlds. And in the end, we'll have time for Q&A as well. A little bit about us before we begin with. My name is Dhawal Parvatikar. I'm a qualified chartered accountant. I've also completed my one-year executive management program from IIM Ahmedabad. Over the last 16 years, I've served as a CFO and a finance leader across India and in the Middle East, across various multinational brands, ranging from industries like oil and gas, advertising, public relations, commodity trading, and much more. I'm now the co-founder and lead faculty at FP&A Professionals Institute. I've mentored thousands of chartered accountants and finance professionals. Over the last 6 years, I've been an active online instructor, and I've trained more than 5,000 professionals on various topics like FP&A, finance business partnering, CFO career coaching, and much more. I've also had the privilege of building an exciting CFO community of 200 plus CFOs across the Middle East. I've also been part of 10 events. Somewhere I've gone in as a host, as a moderator, as a panelist, as a keynote speaker. It's been an exciting opportunity to interact with these 200 CFOs and understand from them firsthand as to what are they thinking about finance teams and how to help them build a futuristic finance team. I am happy to have joined by my co-founder Asif Masani. Asif, a quick introduction from your end.
Thank you so much, Dhawal, for having me. A quick background about me. I've been working in finance, FP&A very specifically for more than a decade now. I started in audit back in 2010, and then in 2013 I moved into FP&A. Worked in FP&A for more than 10 years. When I started, I was an analyst back into 2013, and then my most recent role was the FP&A lead for APAC and India for one of the largest edtech companies. And in 2023, we started FP&A Professionals Institute. Although we have been training on the weekends as our hobby since a long time, 2023 is when we formally decided to quit our jobs and start the Professionals Institute. So that's a little bit about me. And what we try to do at FP&A Professionals Institute is we not only bring our expertise, which is me and Dhawal, but we connect with the top FP&A experts across the globe from North America to Europe to Middle East. And we bring all of those expertise to you through our content. And that content can be a webinar like this, or it could be a podcast, it could be a book, it could be courses, it could be certifications. You can see over the last few years, we have trained more than 5,000 participants across all of these certifications and courses. And today we'll be also talking about our flagship certification, which is the Certified Global FP&A Professional, in some time, maybe at the end of this webinar. So very excited for this next 1 hour or so, and we'll give it back to Dhawal for the today's webinar.
Thank you, Asif. Always happy to partner with you. So what are we going to cover today in the next 60 minutes or so? We'll try and understand the difference between the controller world and the FP&A world. What are the focus areas? How FP&A is going to be very different from your regular finance and accounting role? And what is so special about FP&A? And then what are some of the core activities involved in FP&A? We'll also look at some practical examples. I'll share with you a couple of case studies. We'll also quickly build a budget as well. We'll also look at a couple of management reports, try and understand the difference between a budget and a forecast. And then I'll give you a sneak peek into how the FA world looks like and try and give you the closest experience to the FA world. And then we'll also look at how do you transition from an FP&A function, from an accounting or a controllership function to an FP&A role. What are the steps that you can take? What are the certifications that you can take benefit of? All those things we will be discussing in the end. So all in all, an exciting next 60 minutes. So get rid of all the distractions and let's focus on today's content. I welcome all of you once again. Cool. So let's start by understanding the world of a CFO, right? If you can visualize a CFO's office, right? A CFO has three main responsibilities in the company. One is a controllership function, which is all about the routine hygiene of the accounting function, where you have activities like AP, AR, GL, tax, different kind of internal audit, statutory audit, SOX audits, and all these compliance related activities, which are the basic expectations from a CFO or a finance function. And then you have the treasury function, which is all about cash management, banking relationships, hedging, making sure you have adequate credit lines from your banks, making sure that your working capital management is adequate, credit policy is updated. All of these things come under the treasury function of the CFO's office. And amidst all this chaos, somebody needs to keep an eye on the performance of the business. So that is where FP&A role comes into play. The main function of FP&A is to provide timely and accurate insights to the CFO and other senior business leaders in the company so that they can take informed and prudent financial decisions. So FP&A will constantly be working with various cross-functional team members, senior leadership in the company, help them with budgeting, forecasting, different kind of performance analysis, commercial analysis, and help them manage the performance of the business. So that is where FP&A function comes into play. Now, what is the difference between the controller world and the FP&A world? Let us try and understand this difference through the conversations that are happening in the controllership function and the FP&A function. Now, I'm going to cover, there could be n number of differences, but I'm going to cover 4 broad areas and help you understand the differences in the conversation between the controller world and the world. So there is some background noise. Let's try and understand the difference between the controllership function and the FP&A function. Now, the focus for a controller has always been about compliances, reporting, historical performance, right? Reconciliations, making sure that the financials are published on time, making sure that the reports are published on time, and the performance is published on time. So historical performance and publishing the reports has always been the controllership focus, whereas is a slightly forward-looking function. It is trying to understand about the business plan, short-range planning, long-range planning, how my next quarter's forecast is going to look like, what are the trends that are upcoming in the market which will disrupt my business. All of this is slightly future-looking when it comes to FP&A. So FP&A is far future-looking compared to a controllership function. Now, again, don't get me wrong. This is not about controller versus FP&A. This is just to understand the difference between the controller's world and the FP&A world. Both of them are equally important to run a business. Stakeholder interaction. In the controllership world, you have your auditors, accounting teams, tax teams, regulators, different kind of regulators. So these will be your world where you will be interacting with various stakeholders in these functions. And then for FP&A, it would be your C-suite, your business heads, your general managers, your various cross-functional team members. All of this will be your world where you'll be collaborating with various cross-functional teams on a regular basis. Now, in terms of technology conversations, again, controller world is focused on ERP, making sure that all the transactions are captured properly at the regular coding level. It could be a cost center coding or a profit center coding or a GL coding, right? All of that is ensured at the ERP level. Whereas FP&A is also discussing about planning tools, business intelligence tools, how do you improve your forecast, and what are the different kind of models, and all of these things are discussed in the FP&A world, which is slightly futuristic in nature. And then comes your budgeting and variance analysis. Again, the controllership function looks at understanding budgeting from a rule book standpoint, or rather in a control standpoint, where it tries to understand whether some department has exceeded the given budgets or no. But whereas FP&A is all about reallocating the budgets to meet the performance goals. It also helps the business teams to form business cases. Now, let's say my marketing budget is $100,000 and I've kept $20,000 for LinkedIn. But somewhere mid of the year, I decide to increase my LinkedIn allocation compared to, let's say, a YouTube or a Google. And that the team needs to evaluate this proposal and help the marketing team build a business case, right? So we look at the upcoming budgets, or what is the spend, or what is the revenue that will be generated in the coming quarter, in the coming rest of the month. So that has been the focus of FP&A. So I hope you are able to appreciate the difference between the controller function and the FP&A function. Now, some companies have a role called financial controller. Now, this controller role largely is compliance, but in some cases, it may also have some FP&A elements as well, if it's a small and medium enterprise where there is no clear role distinction between compliance and commercial. Now, some companies also have a role called business controller. Now, business controller is purely FP&A and business finance. It's more like a finance function embedded into a business. For example, take the example of a Johnson & Johnson. Yeah. Now, Johnson & Johnson has multiple departments, eye care, baby powder, beauty. All of these are different departments within Johnson & Johnson. Now, you could be business controller, baby products, right? Which means you're responsible for business finance and FP&A of the baby products division. So that is the terminology business controller. So every company uses a different word, but largely what you need to try and understand is that controller functions are, in most of the cases, compliance focused, and FP&A roles in most of the cases are commercial focused. Now, what name do they want to call it? Depends on the company, depends on the geography as well. So that's the distinction between the controller world and the FP&A world. Now, let us also try and understand how does an FP&A role look like on a day-to-day basis. So let's try and understand with some of the questions that will be directed to you if you are working in a role. What is the Q1 revenue target for our department? Classic question from a business head or a general manager that he wants to understand what is the revenue target that they need to achieve in the coming quarter. We will look at your budgets, we will look at your forecasts and answer this question, which will help the business team plan their operations in such a way to meet the revenue target. How much have you set aside for LinkedIn marketing in the upcoming financial year? What is the quarterly breakup? Now, it is not just enough for you to compile the budget for a the marketing budget and then just give it to the marketing director. The marketing director might also want to know the phasing and the allocation, internal allocation as to how much have we allocated for which channel. Now, let's say if I've allocated $100,000 for LinkedIn marketing. Now, when am I going to spend this? How much will I spend in Q1? How much will I spend in Q2? What are the metrics that I need to meet so that I continue spending this amount? If I'm not meeting the metrics, then do I realign it or should I reduce my spends? All of these questions will be answered by the team by constantly monitoring the actuals and also looking at the forecasts. Out of the 50 headcount additions, how many are we planning to hire in Q2? Classic question from an HR director. Yes, you want to hire 50 more people in your department in the coming financial year. But when do we hire them? Do we hire all of them on the 1st of January? No, it needs to be phased appropriately. And that phasing has to be in sync with the business. If your business is doing well, then you will continue with the hiring plan. If your business is not meeting the numbers, then you may want to curtail your hiring plan or postpone your hiring plan as well, right? So that is a classic question from an HR director, which you will be supporting with through your actuals review, through your budgeted headcount, through your phasing, through your forecasted phasing. How much new business do we have to bring in Q4 to cover the shortfall in Q3? Now, 3 quarters have already passed. There is actual performance already available, but you have missed your targets. Now the business head wants to know how much do we need to do in Q4 to cover that shortfall till YTD Q3, which means this is a classic question that you will look at your forecast and help the business team answer that question. What is the impact on profit if we drop our prices by 8%? Classic scenario planning question. Management will always come to you with questions like this. If we drop our prices, then what happens? If we increase our prices, then what happens? If we increase our discount to match our competitor, then what happens? All of these kind of things will have an impact on the margins, on the profitability, on your performance, on your phasing. All of these things will have to be answered by working out the different scenarios in your FP&A roles. So I hope this gives you a sneak peek into what happens in a day-to-day role in an FP&A function. Now, if you notice, none of these questions have anything to do with your accounting standards, with your US GAAP, with your IFRS, or any of the accounting rule books that you have studied. All these are commercial performance management related questions. These help you run the business. Simple. And many of these kind of questions will come to you in your FP&A roles. And that's how FP&A role differs from a regular accounting role. Right? It's not rule-based. It's largely judgment. It's about performance management. It's about influencing the performance of the business, helping the business teams the right kind of data story. All of these things come under the FP&A function. Now, what are some of the key components in the FP&A function? Now, no matter what kind of a company you work into, small, medium, large, you will be working on at least these 3 things. One is the budgeting. Second is forecasting. And under management commentaries, you will be working on variance analysis and profitability analysis. So let's spend 3 seconds on each to understand what these are. Budgeting is your annual exercise, right? Before the start of the financial year, you undergo a budgeting exercise where you're trying to prepare your estimated revenue, estimated costs, and estimated operating profit for the upcoming financial year. So the end outcome of the budgeting exercise looks pretty much like a P&L statement, which will be approved by the board and then uploaded in the system. And that becomes your guidance. That becomes your target for the next financial year. Now, forecasting, on the other hand, is tracking the ongoing performance of the business. You do it either on a monthly basis or on a quarterly basis. If you're doing it on a monthly basis, then you'll be preparing forecasts like 1 plus 11, 2 plus 10. That is 2 plus 2 months of actuals, 10 months of forecast. 3 plus 9, 3 months of actuals, 9 months of forecast. Where we are trying to understand what would be my estimated performance, revenue, costs, and operating profit for the upcoming 9 months or the upcoming months in the balance period of the financial year. And then management reporting, you will be producing a number of different kind of management reports. Different stakeholders look at different kind of management reports. You'll be publishing a reporting pack typically at the end of the month or end of the quarter, as the case might be. And in order to produce these reports, you will be doing a lot of comparisons, actual versus budget, actual versus forecast, current year versus previous year, current quarter versus previous quarter, and try and understand the business reasons behind these variances and then explain to them in your reporting packs so that the management is able to understand the performance of the business, what is working for them, what is not working for them. And then comes your profitability analysis. Every company is structured in a different way. Some companies structured branch wise, some companies are structured business unit wise, product wise, client wise, right? And you will prepare different levels of profitability: branch profitability, business unit level profitability, product level profitability, SKU level profitability. So depending on how your company is structured and the size and complexity of the business, you will be including different types of profitability reports as part of your management reporting pack. Again, variance analysis and profitability analysis are not standalone activities, but these are carried out in order to produce your monthly reporting pack. So that is the management reporting for you. So no matter what kind of a company you go into, you will be working either on budgets, forecasting, or management reports. Now, just a word of caution here. Depending on the size and complexity of the company and how big the company is, you may not have a full P&L visibility. You may not get a chance to work on an end-to-end budget of all the components. Larger the company, more specific will be your role. You will be only responsible for revenue budget and revenue forecast. Somebody else will be responsible for travel budget. Somebody will be responsible for headcount and personal cost budget. So that is what is going to happen if you're working for a large company. So don't expect full P&L visibility or a CFO level P&L visibility, especially at the junior roles. So these are the different components of FP&A. So what we'll now do is we will also look at a quick case study on building a revenue budget so that gives you a taste of what happens while building an end-to-end revenue budget of a company. And then we'll also discuss quickly around forecasting, and I'll show you one management report as well. So that will give you a taste of what does it like to work in the FP&A function. So let's look at the B2B revenue budget case study. What is B2B? B2B is business to business, a business that caters to other business. B2C, business to consumer, a business that caters to direct consumers. So that's a B2C. So today we'll be looking at a B2B revenue case study and try and build an end-to-end budget. So I will build the budget in front of you. I'm going to ask you some questions at regular intervals. You will have to answer or respond to that in the chat box. And I'll share the file with you in the chat box. Don't worry. Right now, just focus on the case study that I'm sharing. I'm going to solve it in front of you end to end. And after that, so you are working with Infosys as a business finance manager, primarily looking at client contracts, business unit profitability, and business unit FP&A. So you are working for an embedded business unit in Infosys. Infosys is a B2B software company providing software services to various clients, right? People come to Infosys with their software requirements. Infosys builds it for them and then bills it to them. The revenue generated by Infosys is largely split between retainer contracts and projects. Retainer, where you are billing a company on a fixed basis, $10,000 per month, $15,000 per month, or on a time basis, right? I charge $200 per hour for a software developer, $100 per hour for a junior software developer, whatever case might be. And then you take out the invoice at the end of every month. And then project base, 3 months project, 6 months project. And this project will have different milestones. If you meet milestone 1, then you'll get 25%. If you meet milestone 2, then you'll get 40%, right? So these kind of milestone based projects as well, the billing will happen on milestone basis. So retainer contracts and then project basis. You are required to work with the business lead and prepare revenue projections for 2026. Now you are at the end of 2025. You are going to prepare the revenue projections for 2026 for this department. Senior management guidance is to aim at least 12% revenue growth over 2025. Now again, this is a senior management guidance, right? Before the start of the financial year, the senior management may have a certain ambition, right? Next year we want to grow by 10%. Next year we want to grow by 12%. So in this case, the guidance is to grow by 12% compared to the current financial year. Assume that we are now at the end of 2025. So now remember, we are at the end of 2025. So we are now preparing the budget for the upcoming financial year 2026. So the steps involved in the budgeting exercise are pretty straightforward. I get my templates ready. I have my historical data. I look at all my existing contracts and then build my templates and then go into the discussion with the business team. So what I have done here is I have built my template. I have my client-wise data, whether it is a retainer or a project. These are my existing clients. What was the revenue for 2025? If it's a retainer, then what is a retainer per month? I have my template ready for 2026, which is my Jan to December monthly revenue budget. So I'm going to populate the numbers here in this. And I take this template and I start my discussions with the business team, because without discussing with the business team or the general manager, I won't come to know how the performance is going to be for next financial year. So that's where your collaboration comes into play. And after discussing with the business teams, I have captured some notes here. Now what I'll do is I'll look at these notes and try and give effect to them one by one and populate the entire 2026 budget. So let's start looking at these notes one by one. Visa will renew its contract for one more year at the same rate. So Visa is currently paying us $1 million per month. It will renew at the same rate. So which means from Jan to December, I'm just going to take it $1 million per month. Bank of America contract ends in June 26, and there's a strong possibility that they may not renew. So Bank of America is paying us $500,000 per month. The contract is going to end in June. And then the business head feels strongly that they may not continue with us. Whatever might be the reason. They might want to do an RFP. They might want to invite new bids. They might not want to work with us anymore. Whatever might be the thing. He has a strong anticipation that this client may not renew post June 2026 contract. IBM has agreed to renew its contract with an escalation of $100,000 per month. So IBM is currently paying us $1.4 million per month. Escalation of $100,000 means it will be $1.5 million per month. This will continue till the end of the financial year. Now remember, the actual contract might be for 2 years. I don't know. But right now, I'm going to populate only for the upcoming financial year because I'm building the budget for only the upcoming financial year. Next, ExxonMobil has decided to discontinue our services from 2026. Sorry, I want to reconfirm. Is everybody able to see my Excel sheet, Asif?
Yeah, we can see it.
Sorry. Yeah. So ExxonMobil has decided to discontinue our services from 2026. Oh my God, what happened here? So ExxonMobil, which pays us $6 million per month as retainer, it was the largest client in 2025. It has decided to discontinue our services in 2026. So I'm just going to mark it in red. Now, remember, software services is a people-based business, which means that I have a big team deployed on ExxonMobil. What will I do with that team? I don't know. We will see. Right now, we are only populating the revenue budget. And this is the information that I know that ExxonMobil does not want to continue our services with from 2026 onwards. Yes. Yeah, Rajendra is directly going for layoff. Wait, my friend, let's see. Maybe you will win some new client. So, see, it's easy for us to say layoffs right now, but when you are wearing a CFO's hat, it's extremely difficult, trust me. And I have been in one layoff exercise. I couldn't show my face to the employees, for whom we were of the termination letter. And I didn't sleep for 2 days. And my wife was asking me, why are you so upset? I said that I let go of 30 people in front of my eyes. I handed them the termination letter. And trust me, it's not easy. It's not easy for any senior management. Anyways, that's a different discussion. So let's focus on revenue right now. Talks with Microsoft have fructified. Contract is under discussion. Likely commencement of retainer from 1st of March at $3.5 million per month. Now, we lost one client, but we won another client as well. That's part and parcel of the business, right? Microsoft has given us a confirmation. They have already signed the contract or they have already agreed to sign with us. But usually what happens in a services business is that the legal teams take a lot of time to finalize the contracts. There's a lot of back and forth that happens on IP clauses, indemnity, confidentiality, non-disclosure. A lot of clauses are discussed and the legal teams do a lot of back and forth. So we anticipate that the Microsoft retainer, which is at $3.5 million per month, will start from March 2026 onwards. Remember, we are in December 25. Okay, so we anticipate that over the next 2 weeks, the contract will get finalized. We'll sign the dotted line and then the project or the retainer will commence from 1st of March 2026. L&T has asked for a scope and fee reduction of 20% from April 26 onwards. So L&T is paying us $1.5 million per month. This will continue till March. And from April onwards, they have asked for a 20% fee reduction. So a $300,000 drop in fee. And this will continue till the end of the year. Now, maybe some projects might have come to an end. Maybe the number of engineers deployed on L&T will not remain the same. Maybe we want to pull back some of our team members because the scope has reduced. So that's why the fee has reduced, right? Pretty organic in that sense. So $1.5 million per month has come down to $1.2 million per month. Ministry of Tourism are planning for a bigger project, roughly $4 billion, split equally in April and May. Now, Ministry of Tourism had done a $1 million project with us last year. This time, they are going to do a $4 million project split equally between April and May. Now, remember, I am in December 2025. So I'm going to put these $2 million as a placeholder in April and May. Now, I don't know whether the project will exactly start on 1st of April. It may start on 7th of April. It may start on 10th of April. But according to the information that I have now, sitting in December 2025, I anticipate that this will be equally split between April and May 2026. Management aims to achieve an overall revenue growth of 12% over 2020. Sorry, this should be 2025. 2025. So 2025 revenue was $125.8 million. And the management now aims to achieve 12% growth, so which roughly works out to $141 million, so $141 million. Now we just took stock of all our clients and also discussed it with the business teams. And I'm seeing that we are at $87.3 million and the management wants to do $141 million. Don't know what the management is poking, right? What do we do now in this case? Do you think we will be able to do $141 million? If yes, then how do we do it? Any ideas? You are the FP&A lead for this business unit. Your management is asking you to deliver $141 million. Tell me, how will you do it? I want your responses in the chat box. Please don't unmute yourself. I want your responses in the chat box. Take 30 seconds to think. Type your responses in the chat box, please. What will we do? Last year, it was $125.8 million. The management wants to do $141 million this year. We just took stock of all our clients. Shivam says we'll try to get new deals. New business is one of the ideas. Sachin is directly going for cost cuttings. No, we're not discussing about cost here. We're only discussing about revenue. If you're saying that, if you're telling me that this revenue increase of 141 to $141 million is not possible, then we'll come to cost. But right now, we are just saying whether this is possible or not. New projects, add new retainers, give new targets to marketing teams, get new clients, new business. A lot of people are talking about new business. Increase the pricing, nobody is going to give that increased pricing. Or already existing clients have already confirmed what they will pay us in the upcoming financial year. So new business is actually the right answer. New business is actually the right answer because ExxonMobil has already told us that if I see your team members in the 5-kilometer radius, I'm going to shoot them, right? So we can't go back to ExxonMobil. So new business is the right answer. But next question is, how do we present this in the Excel sheet? Take 30 seconds to think and type your response in the chat box. Those of you who are saying new business, that is the right answer. Focus on the Excel sheet. Focus on the screen now. Now, there are two ways to present new business. Yeah, that's correct, Rajinder. So there are two ways to present new business. One, I can just say new business as a line item and put some placeholders here. A better and a scientific way to capture this is I just say, I look at my existing new business pipeline. So in a services business, what happens is that we are constantly pitching for clients. So there could be a list of 10, 15 clients that we might be pitching right now. In which case, I'll try and understand where are the high probabilities. Let's say I'm just going to say a placeholder called client 1, and this is going to be a retainer. Most likely this retainer will start from April, let's say a $3 million. See, a $3 million business is not a big deal for us. We have done 3.5, we have done $6 million businesses also. And now let me put client 2 as a placeholder. I'll tell you why I'm doing this, but just be a little bit patient with me. And then I'm saying, let me put $2.5 million and see where we are. We are roughly at 4.8%. Let me also put some projects as placeholders. We have got L&T, we have got Ministry of Tourism projects. So we can get more projects as well. So let me put one project per quarter as a placeholder. Now I'm putting it at the end of the quarter. It doesn't mean it will come on 31st of March. It means that I might get it anytime during the quarter, but just from a budgeting standpoint, I'm taking it at the end of the quarter. I'm now at 11.1%, not bad. So maybe let me just increase this to 2.5 million and also this to 2.5 million, 11.9%, maybe another 2.5%, 12.3, not bad. So we were asked to do at least 12 million. We are looking at a 12.3%. So basically what I'm trying to also say is that of all the clients that we are pitching from the pipeline, we will get at least one or two small projects every quarter, which will total up to $2 million. Now this way, I'm able to bring it to $141 million. Now a question for you. What we did initially, we looked at our existing client contracts, and we populated the revenue. That turned out to be $87.3 million. In the services business, this is called as confirmed new business, which means I know where this business is going to come from. I already have a near signed contract or a signed contract for them. And what we put here as a placeholder, we studied our new business pipeline and we saw some high probable clients and then translated that into client 1, client 2 and put that as a placeholder. This is totaling up to $54 million. And this is in the services business called as unidentified new business, which is, I don't know where this business is going to come from, but this business will come from some client in the pipeline. Companies will not have full visibility of 100% revenue at the start of the financial year. Identified or the confirmed new business was 62% of the total business target for the next financial year. An unidentified new business, which is $54 million, is to 38% of the total financial year. Now, a question for you. I want you to type a response in the chat box. Is 38% high or low? Is 38% high or low? Just type a response in the chat box. Is 38% unidentified new business high or low? Sachin says low, and most of you say high. So by looking at it, 38% feels high, but the real answer to this is that we don't have the context. What is the context? If historically you have delivered anywhere between 35 to 40%, 45% of new business, then 38% is not high. This is something that we routinely do. Let's say if the last 3 years' average ranges between 15 to 20%, then 38% is high. Unless I have some concrete information that I am with one or two clients, I'm near closure, then a 38% business seems achievable. Otherwise, it is high. We should try and coach the management that, boss, 38% new business has never been achieved before. Okay, maybe we want to tone down our target. So the 38% is high or low, depends on the context, and it also depends on the business. Some businesses, for example, take an architecture firm or an interior design firm, they start with as high as 70 to 75% unidentified new business at the start of the financial year. Why? Because they are largely project-based businesses. They're consistently looking for new projects, as opposed to an audit firm, let's say KPMG. Yeah, KPMG, once it lands an assurance client, this assurance client will probably be with KPMG for 5 years. So you can reasonably estimate the audit fee that is coming from this client in the coming financial year. So a company like KPMG will have very low unidentified new business, could be ranging anywhere between 15 to 20%. Whereas an architecture firm will have as high as 60-70% unidentified new business. They're constantly pitching for new projects. So that is how the concept of confirmed and unidentified new business operates. Now, mind you, even at a 38% unidentified new business, you're not growing by 38%. You're only growing by 12%, which means losing and winning clients is a routine part of a services business. You'll always have to keep pitching for new clients, either to replace old clients or to grow in your business. Now, a question might be running in your mind that here, Dhawal, we have about 8 clients and a couple of new business clients. Now, what do we do? How do we build this template if we have 800 clients instead of 8 clients? Now, the answer to that is, first of all, you would have more than 10 minutes to build it. You'll probably have a couple of weeks. So the approach to that is that you will discuss your top 25 clients with the general manager or the business head, which will usually account for 60-70% of your business. And everybody else, you will just send them a template. They will fill in the template. They will fill in the estimated contracts, project revenue, and everything from the CRM data, your customer relationship management tool. Or you can populate it and then send it to the business teams to reconfirm them basis the data that is available in the CRM. And then they will confirm it, and then you will compile it and submit to the management. So I hope you get a quick taste of how do we build an end-to-end revenue budget for a services company. Okay, this is a short case study. In the FP&A program, we cover far more complex and detailed case studies than this. But this is just a quick glimpse of what happens in building a revenue budget. Yeah, Sachin says this is just a forecast, not a confirmed revenue. Absolutely, this is just a forecast. Even what you're taking as confirmed business might also not happen. Maybe 2 months down the line, some client might resign as well. Now, IBM had signed a contract for the full year. Maybe by end of February, that client might resign as well. We don't know. But as of now, sitting in December, I feel that this is a confirmed business. So that's the terminology that is being used. It doesn't mean that it's actually going to happen the exact same way. So let me quickly share this Excel sheet with you guys in the chat box so that you can download a copy of this. Just give me a second. So I've shared the copy of this in the chat box. Once you download this on your desktop, just type done in the chat box. I'll wait for 30 seconds. Just type done in the chat box once you have downloaded the Excel sheet. This is just for your reference. I just see only one done so far in the chat box. So I'm going to assume that you are able to download it. Let's continue. Bring back your attention on the screen. So we discussed the B2B revenue budget case study. So remember the 4 things that I mentioned to you: budgeting, forecasting, and management reporting. Out of that, we just covered the first item with an example that's called budgeting. So we covered the B2B revenue budget example. So similarly, you'll be working on headcount, salaries, marketing, different cost line items, travel budget. You end up with liaising with the business teams to cover that entire gamut of entire budgeting exercise. So that's the budgeting exercise for you. Now let's move to the next point, that is forecasting. Now, how is a budget and a forecast different? Classic FP&A interview question. Can you explain the difference between a budgeting and a forecast? Can you explain the difference between a forecast and a rolling forecast? So let's look at what is forecasting. The top table that you see is a budget that is built for financial year 2024. Assume that we are in 2023. Let's say this is the budget. Just quickly, let me stop sharing the screen. Just give me 1 second. Asif, can you disable annotations from the host tools? So the top table that you see is the budget table or budget prepared for 2024 financial year, where you have your revenue. This is an oversimplified table: revenue, cost, and profitability. Here you see the representation as BUD, which stands for budget, and you have your estimated revenue for the financial year, which is $1.35 million, okay, and a profitability of 12%. Now you are at the end of January 2024. Remember, budget you prepared in 2023, end of 2023. Now you're sitting at the end of Jan 2024. At the end of Jan 2024, you have the actual results, ACT, actual results for January, and you ended up missing your budget by $10,000. Now, at the end of January, what you do is you prepare something called as a 1 plus 11 forecast. 1 month of actual, 11 months of forecast. So at the end of January, I retest my assumptions for the budget. And if they still hold good, I capture the same amounts that are in the budget for the rest of the financial year. If not, then I will make some changes as well. Now here in this example, the budget assumptions are still holding good for February to December. That's why you will see that the number is holding from February to December. Now this could very well be 107, 105, 95, whatever you want to take as well, if you have updated information. Now let's move one step further. The top table that you see is the same budget table that you saw on the previous slide. But now 3 months have passed. At the end of March, we will prepare something called as a 3 plus 9 forecast, which is 3 months of actuals and 9 months of forecast. Again, at the end of March, I am going to retest my assumptions, whether my budget numbers still hold good. If not, then I'm going to change it. Maybe I'll change this to 105. Maybe I'll change this to 107. Maybe I'll change this to 95, whatever the case might be. Whatever is the latest information that you have, because you are now at the end of March 24. Budget you prepared in December 23. So at the end of 3 plus 9 forecast, I'll update my information. So my budgeted revenue is 1.35 million. But at the end of my 3 plus 9 forecast, my forecasted revenue is 1.365. My budgeted net profit is 162. My forecasted net profit is 168. You don't revise the budget every now and then. Budget is a one-time activity. It's a one-time exercise carried out just before the start of the financial year. But forecast is an ongoing activity that you track either on a monthly basis or on a quarterly basis, depending on your company's cycle, which will tell you how are you tracking versus the budget, or what is the ongoing trend of your revenue or your expenses. That is what is the difference between a budget and a forecast. I hope you are able to appreciate the difference between a budget and a forecast. Budget is a one-time activity carried out just before the start of the financial year to give you an estimate of the next financial year. Whereas forecasting is an ongoing activity to track the performance of the business, carried out either on a monthly basis or on a quarterly basis. It captures the actuals for the completed period plus the balance estimates for the balance period of the financial year. So that is the difference between a budget and a forecast. So Rajendra has a question, just a quick one. While we are preparing the budget at the time of budgeting, we also forecast what labor cost is. No, so let me tell you. So forecast in technical terms means the sum periods of actuals and the balance estimated for the rest of the financial year. So during the budgeting exercise, what you do is you budget for your personnel cost, like how you budgeted your revenue. You will also budget for your salary. You will budget for your increments. You will budget for new hires. You will budget for training. You will budget for travel, all of these things. You don't call it a forecast. Forecast is typically used to track performance during the financial year. What is my forecasted travel expenses for next 9 months? What is my forecasted revenue for next 9 months? What is my forecasted expenses for next 9 months? What is my forecasted headcount for next 9 months? It's usually within the financial year. So that is the difference between a budget and a forecast. Technical definition between a budget and a forecast. So we looked at budgeting, we looked at forecasting. And let me quickly show you one example of management commentary. In the interest of time, I'll just show you one quick slide of a management report. Here is a quick waterfall chart to explain the variance, right? So here is my revenue 2024. And here is my budgeted revenue for 2025. It is growing from $35.9 million to $55.3 million. To explain this, I've used a waterfall chart. And this waterfall chart, I have divided into two sections, the price variance and the volume variance. And I've also used a nice story or a narrative or an action title for this. Got average price increase of 14% across categories. You see that there are 4 categories. The average price increase that you see is around 14%. Volume growth in cone and cup sales. Volume growth in cup. This is an ice cream company, so cone and cup. Offset by volume dip in sandwich. Yeah. So this is how I'm explaining. This has come through an Excel. This waterfall chart has come through an Excel, but these arrow marks and the callouts that you see that I have put manually just to make it more impactful. So this is a very simple example of explaining point A and point B, reconciling it and showing the variance as to what is happening between point A to point B. Now there could be n number of reports like this. In the CGFA program, we cover many more management reports, profitability analysis, different kind of charts, visuals, right? All of those things we cover as well to help you prepare the management report or all the reports that are typically looked at by the management. So I hope this gives you a sneak peek of what happens in the budgeting, forecasting, and management reporting in a company. Now, one thing that will be common in your FP&A role is that you will be continuously interacting with various stakeholders various cross-functional stakeholders, typically to collect a lot of inputs and updates from them. And you will also be providing a lot of reports and insights to them so that they can take certain decisions. For example, with HR, you'll be talking about workforce planning, headcount forecasting, salary, increment, incentives, benefits, end of the service benefits, terminations, redundancies, all of these things you'll be discussing with HR. With sales, you'll be talking about revenue forecasting, pipeline management, sales performance metrics, incentives, sales commissions, all of these things, discounts, all of these things will be discussed with the sales team. With marketing team, you're talking about marketing ROI, which channel to use into, organic, inorganic, right? Traditional channels, digital channels, campaign performance, return on ad spends. All of these things will be discussed with the marketing teams. With production and operations, you'll be talking about capacity planning, utilization, productivity, yield ratios, cost efficiency, labor cost variance, material cost variance. All of these things will be discussed with production and operations. And then with supply chain, we'll be talking about inventory management, working capital optimization, inventory cost optimization, freight cost analysis, make versus buy decisions. All of these things will be discussed with the supply chain. So again, depending on where you are placed in the company, you will be having these various cross-functional stakeholders with whom you will be working on a lot of commercial aspects, which are part of a larger FP&A role as well, or a function as well. So I hope this gives you some sneak peek of how FP&A role is going to be different from your regular finance and accounting role. Now that brings us to the question, how do we prepare for FP&A roles? Now again, I'm just going to cover the top 5 tips here. One, leverage your sector experience. For example, if you have done accounting or audit in, let's say, an insurance company, then try for FP&A role in an insurance company. At least you understand the industry. At least you understand the terminology, what is premium ratio, claim ratio, what is insurance, reinsurance. At least you understand the terminologies, which will help you manage the performance of the business as well. Then study management reports. Even if you may not have access to all the FP&A reports, try and make friends with the FP&A team or the management team, right? Where you'll get to look at some reports, even though you're not preparing them from end to end. But at least take a look at how a budget looks like. Take a look at how a forecast looks like. Right? Take a look at how a variance analysis is presented, how a CFO dashboard is presented. At least try and make friends with the performance management team so that you are able to get a taste of, or at least get a sneak peek into how these reports are prepared and where are these used and who uses them. Make compliance your bridge. Especially, this is for especially those who are working in the audit function or an accounting function, right? Yes, use your compliance or your accounting knowledge to move over to the industry side first. Move over to the finance and accounting side first, right? Maybe you will get a blended role, which is 80% accounting and maybe 20% analysis, right? Maybe you will start with that, but slowly you can again pivot into analysis roles. Maybe that will become 60-40 later, 60% compliance, 40% commercial. Yeah. So all those things are possible. Move over to the commercial, move over to the industry side first, and then try and take a step towards FP&A. Learning Power BI and Tableau, which are a visualization tool, right? So which are visualization tools. So that could be a plus. But again, these are not substitute for your conceptual understanding. Many people ask me, if I learn Power BI, will I get an FP&A role? No. Power BI is only an aid. It is not a substitute for your conceptual FP&A understanding. Yeah. However, it's an added advantage because you're able to communicate that data. You're able to visualize. You're able to tell a story better if you understand Power BI or Tableau. Then create a reason with a qualification. Today, we have plenty of certifications and coaching programs available in FP&A as well. We'll talk about one of them soon. So use that as a qualification. Use that as a reason for you to try and craft it on your resume. Call yourself a certified FP&A professional, or mention that you have undergone a course, or mention that you have undertaken a virtual internship, or whatever you might have done to increase the chances of getting that FP&A call. So these are some of the tips for you to transition into FP&A roles. Now, why? So here's a quick recap of what we covered so far. We understood the difference between the controller world and the FP&A world. We also tried to understand some of the key activities in FP&A: budgeting, forecasting, and management reporting. We saw some quick examples as well, and we also spoke about transitioning into FP&A team and some tips around that. Why do you need to transition into FP&A functions? Again, there are plenty of reasons. We have spoken to hundreds of CFOs, and what we were able to identify is that CFOs are looking for these 5 core skills in their FP&A teams or in their finance teams. Now, what are those 5 core skill sets? First, core FP&A concepts, right? Budgeting, forecasting, different kind of analysis, management reporting, building dashboards, building commentaries. All of these are your core FP&A concepts. Yeah, fixed costs, variable costs, discretionary spends, non-discretionary spends. All of these are your core FP&A concepts. Then comes financial modeling. Modeling specific to FP&A, not investment banking, valuations, and all of that. Revenue models, cost models, right? Sensitivity analysis, trend analysis, right? Scenario planning. All of these things are your financial modeling specific to FP&A. Then comes data storytelling. Yes, you will analyze 10,000 lines of Excel sheets, but can the business teams do that? That's where you will have to convert that into a strong insight and then convey it in a manner that the business teams understand. That's where your data storytelling skill comes into play. Data storytelling does not mean dashboard. It means conveying your story in the most effective way to the business teams. Business partnering, collaborating with the various business teams. Just now we saw that you will have to collaborate with various business teams. In my career, I've collaborated with supply chain, I've collaborated with business development, HR, with the CEO, with the legal teams, and so many different teams, right? All to unlock a lot of value in the business, right? That's what is your business partnering skill set. And then, of course, last but not the least, leveraging the technology and AI developments that are happening in the field to be far more effective and efficient. A lot of steps that you will be doing right now. Let's say if you're taking 10 steps to prepare a budget, right? 8 of those steps will now be done by an AI tool, right? And maybe you will just do the last 2 steps, or maybe you'll just review it and then submit it. All of those things are coming in the market, which will make you far more effective and efficient in your role as well. Okay, so these are the core 5 skill sets that CFOs are looking for. Some more reason to learn and be serious about it, because 8 out of 10 CFOs say that it is generally difficult to find the right FP&A talent. And this is done by an independent CFO community called CXO Words. They've done a survey and more than 200 CFOs participated. And 8 out of 10 CFOs say that it is generally difficult to find the right FP&A talent. Why? Because everybody wants experienced FP&A talent. If you look at a position out there, right? Everybody wants 5 to 10 years experience. But boss, there are not enough FP&A professionals out there, right? Anybody who has done a simple budgeting exercise is also calling themselves FP&A. But that's not the case. FP&A is far beyond just budgeting and forecasting. Yeah. So there's not enough qualified professionals out there. So the sooner you're able to get coached on this, you have an advantage. You have a first mover's advantage. So what we have done at FP&A Professionals Institute is that we have developed our own program. It's called Certified Global FP&A Professional Program. We have been running this successfully since last 2 years. This is a global FP&A certification built and delivered by CFOs and FP&A leaders and not by university professors. Program, it has about 10 comprehensive modules, which we'll talk about it in a while, all through experiential sessions, simulations, real life like looking case studies, real life like looking data, okay, practical examples. We'll also be part of a global alumni network. CGFPA program has been taken by students from more than 25 countries so far. You will get personalized sessions with a career coach. You'll also get placement support, your resume review, your interview preparations, mock interview prep. Many times we have seen that our students get case studies in the interviews, right? So they're given a case study and they have to turn it around in a couple of days, right? So all of that support you can expect. So many of our students have been able to land FP&A roles while undergoing the CPA program as well. Monthly Q&A sessions where you can directly ask your questions and get your doubts solved with the faculty. Guest speakers, globally, top experts, tool providers, automation experts, digital transformation experts come to FPI. Every month, we try and bring a unique speaker so that our students are able to get the latest in the market. And all of this happens through our seamless online LMS. Most of the sessions are live on Zoom. You can take it from the comfort of your home. So that's the CGFPA program for you. Now, CGFPA program has 10 solid modules. I'll let Asif cover the first 5 modules on the left, and then I'll talk about the modules on the right. Asif, are you around?
Yeah, can you hear me, Dhawal?
Yes.
So let me start with the introduction to FP&A module. So where we cover the basics of FP&A, how does an FP&A role look like? How does the day-to-day and a monthly, weekly calendar of FP&A look like? Looking at different items, using examples, case studies. Then you have the budgeting and forecasting module where we talk about budgeting methods, budgeting techniques. We cover methods like the top-down, bottoms-up, incremental, zero-based,
Asif,
activity-based.
Asif, I don't know if
Yeah.
it was me or everybody. We just lost you in between. Probably my connection is unstable. Maybe you can continue.
Let me know in the chat box if you are able to hear me. Let me know. Let us know in the chat box.
Yeah, go on. Yeah. Maybe you want to just repeat the budgeting and forecasting. Yeah.
Yeah. So in the budgeting forecasting, what we do is we cover the different methods and techniques in budgeting, including your zero-based budgeting, top-down, bottoms-up, incremental, activity-based, the traditional way of doing the budget, the entire annual operating plan cycle. Also, we cover different parts of a budget. Right from the revenue budget to the cost of goods sold to the marketing salaries and headcount. So we cover each and every aspect of the budget using examples and case studies. Also, at the end, we have a end-to-end example where you start with real life looking data, and then you have to prepare the step-by-step budget using the guided capstone, and at the end, you have to present the budget to the CFO, so which is an end-to-end budget presentation. That's a little bit about the budgeting and forecasting module. AI for finance and FP&A, I'll also touch upon. It's a very fast changing module. We keep on constantly adding new use cases there with all the changes that are happening. We cover your large language models, including your OpenAI, ChatGPT, uh, Perplexity, Claude, agentic AI tools like Manus, then very specific AI and FP&A agents for AI, which are used for very specific tasks, for example, for creating a forecast or for doing reconciliation or for doing variance analysis and commentary. So there are very specific tools that we cover in the AI for finance and FP&A module. Management reporting is a little bit on the different management reports that FP&A teams usually prepare. So right from your month-end, quarter-end reporting to your flash reports to how do you build the entire reporting deck for your business teams, including your headcount reports, your sales reports, marketing reports. You also cover performance management frameworks like balance scorecards, KPIs. Also, we have detailed case studies on topics including the profitability analysis, recharges and allocations, variance analysis. So that's a little bit of the management reporting topics that we usually cover in the CGF. Then you have your financial modeling for FP&A, where we cover the different financial modeling techniques and how you can apply those to day FP&A activities, which includes your revenue modeling, how to build expense models, how do you do cash flow forecasting, how do you do scenario planning and sensitivity analysis. So these are how do you do the three statement financial model, which ties up your income statement, balance sheet, and the cash flow statement. So these are some of the topics that are covered in the financial model for FP&A module. I'll let Dhawal cover the remaining modules, data analytics.
So one thing that will be common in your FP&A roles is that you will be dealing with large sets of data, right? Whether it is financial data or operational data. And that is where the data analytics modules will help you to navigate through these large sets of data, right? So in the data analytics module, we're covering the basics of Power BI, we're covering the basics of Power Query, SQL, so that you are comfortable using these tools in your day-to-day FP&A roles. Again, we don't claim to make you an expert in these tools, but at least we take you to a level where you're comfortable to use these tools in your day-to-day roles. And then comes financial analysis. See, financial analysis is not just about ratio analysis. There are different kind of analysis that a CFO might want to look at to manage the internal performance of the business. It could include horizontal analysis, vertical analysis, different kind of margin analysis, right? All of that is covered in the financial analysis module. And then comes storytelling and presentation. Like I mentioned, storytelling best practices, presentation best practices. How do you build a budget presentation? What to say, what not to say, right? How do you manage expectations of the various stakeholders? All of those things are covered in the storytelling and presentations module. Then strategy. See, as and when you get senior in the company, your senior management will start talking a certain strategic language. At that point in time, you cannot use strategy in a very loose way, right? So that's why we cover all the popular strategic tools and also show you how FP&A roles are interlinked with these strategic tools and how FP&A can contribute or finance can contribute to these strategic tools as well. And then comes business partnering. It's all about your business acumen, your ability to build strong cross-functional relationships, because end of the day, you want to go back and influence the business team's performance with your data or with your analysis as well. So that is what is business partnering. And we're not covering any theory in this. In fact, we are showing you practical examples of how Asif and I have collaborated on various occasions with business development, HR, with CEOs, with CFOs, and different stakeholders in the company. So that is what is the business partnering module. All in all, a 10 solid modules. Don't just think about this as a certificate or a program. It is Asif and my 20 years of blood, sweat, and tears poured into a 6-month program. We have built it with a lot of love and care, and hopefully you will feel the same when you take it. Okay. What is the eligibility criteria for the CA program? You need to have a bachelor's degree or a global equivalent in finance, accounting, or business. Or alternatively, you may have your professional qualifications like CA, CMA, CPA, ACC, or any respective accounting qualification of your respective country. We don't claim to be a substitute for these primary qualifications. In fact, we are a supplement to these qualifications, because what we are trying to teach is highly practical and it not necessarily can be captured in a 100 marks paper. We are also CPD UK recognized, so you can claim continuing credits in your accounting qualifications as well. How do you get the CGFPA award? Every Saturday, we meet live for 2 hours. That's what we expect, right? So live classes are for 2 hours and you need to attend at least 50% of the classes live. They'll be held live on Zoom, right? And then somewhere in month 5 or 6, you will have to submit your capstone assignment, which is an end-to-end budget presentation for a CFO. All the guidance will be given on how to do that. Don't worry. Once you submit your capstone, ensure 50% attendance, then you will be eligible for the final examination. The final examination is a 2 hours proctored examination 100 marks, 50 questions, multiple choice questions type examination. And after you clear that examination with 50% passing marks, you will be awarded the CGFPA certificate from FP&A Professionals Institute. We are an autonomous body at this point in time. We are not connected with any other accounting body in the world. I just want to be upfront about it. So the ROI for a program like this, I leave it to your imagination. But the course fee investment in this program is USD 1795. You also have an option to pay it over 5 installments. And then the duration will be for 6 months. So every Saturday we meet live for 2 hours. The next upcoming cohort will be starting on 10th of January 2026. The timings will be 8 p.m. to 10 p.m. IST. 8 p.m. to 10 p.m. IST. A total commitment of about 3 to 4 hours a week is required. So 2 hours live in the class and about 60 to 90 minutes of your own time investment is required to do some pre-reading. We sometimes give you some videos to go through, some pre-reading to go through, because we don't want to waste time in the classroom to discuss basics. We don't start by discussing what is FP&A, right? So we expect some level of homework to be done by you as well. This is an executive program, right? But we cover all the important case studies, discussions. We want to maximize the time in the classroom for case studies, discussions, and group activities. So the next cohort is starting on 10th of January 2026. This will be cohort 7. The date that you need to remember is 15th of December 2025. That is when the next round of applications are closing. One round of applications have already closed. There have been enrollments. So make sure that you submit your application as soon as possible. Okay. My request to you would be that just go ahead and submit the application. It is completely free of cost. Let our team, let our academic counselors check your eligibility. Let them come back to you with the ongoing early bird offer or whatever is going on at that point in time. They will also share with you the demo lecture. If you also want to talk to any of our previous alumni, they can share with you some phone numbers as well. You can reach out to them, you can talk to them, right? And do all of your due diligence before you decide to enroll into the program as well. There have been tons and tons of testimonials. Many of them have been able to land FP&A roles. Many of them have been able to implement a lot of frameworks that they learned in their existing jobs as well. Again, talk to any of our alumni, reach out to them on LinkedIn, talk to them on phone. Our academic counselors can share the phone numbers as well. Talk to them, and then they will tell you how the CPA program has been beneficial for them in their careers. FP&Ajobs.com is our new jobs initiative. We are doing everything in our power to try and help our students to get new jobs. FP&Ajobs.com is an attempt to bring candidates and recruiters on one platform. We started this a couple of months ago, I think about 3 or 4 months ago, slowly picking up. Okay? And we want to make it a go-to platform for matching both FP&A talent and the recruiters as well. So do sign up and create a detailed profile on FP&Ajobs.com. Possibly your next opportunity might come from here. So just reiterating that the date that you need to remember is 15th of December 2025. That is when the next round of applications are closing. Not just about FP&A or about your finance career in general. We still have about 5 minutes. We can do any Q&A that you want to do. Anything about what we discussed today or about the program or about FP&A in general. Rajinder has a question. Whether preparation of a cash flow statement is the responsibility of a MA or a finance controller. It is the responsibility of the finance controller. The cash flow statement that you see in the statutory books of accounts is the responsibility of the controller or the compliance team, whereas a cash flow forecast is the responsibility of the FP&A team, where we are anticipating what is the cash collection in the coming periods as well. That is very different looking from your traditional cash flow statement that you see in the back of the financial statements. This is more from an internal management perspective. Some companies do a 13 weeks cash flow forecast. Some companies do a weekly cash flow forecast depending on the size and complexity of your business. Ken has now become a group CFO of a large bank in the UAE. And this person, although has worked for 22 years in the audit, he has done a large bank audits and a lot of consulting work with the bank. So you can always find a lot of transferable skill sets in your consulting experience or your financial due diligence experience, which you can take over to an FP&A role as well. Probably you will be able to do analysis in a better way. Probably you will be able to transfer your analysis skill sets as well. However, the fundamentals of how do you build a budget or how do you build a forecast or how do you build a CFO management report, right? Those things will still need to be learned. But again, every company does it differently. But to answer to your question is that it's not impossible. And there are a lot of transferable analysis skill sets that you can transfer to the FA world as well. Or when you move to the CFO's office as well.
Got it. Thanks.
Any other questions? Any other thoughts? Rajendra has a question. Sir, a fresher with CMA degree, how much salary can we expect from FP&A profile? Again, salary depends on your company, geography, location, a lot of things are involved. But all I can say is that FP&A is in high demand. You can definitely, let me also tell you the salary reports, what they say, right? So if you take up the Michael Page salary report or Robert Half or any of these large recruitment agencies, if you look at their study report, they publish a salary survey report every year. And if you look at this salary reports, you will notice that one trend that you will see in the last couple of years is that FP&A roles or FP&A manager, FP&A analyst kind of roles are actually getting paid anywhere between 15 to 30% more than regular finance and accounting roles. So that is something that you can expect. But yes, there is a lot of demand in FP&A as well. A fresher might get an analyst role or a junior analyst role. An experienced person may get a manager role as well. So depends on the kind of complexity and the company that you are approaching. What type of budget we did today in the session? Yes, it is a revenue budget built for a B2B services company. B2B is business to business. Yes, let me type them in the chat box. So there are these recruitment agencies, right? So it's called Michael Page. Then you have Robert Half. Then you have Kingston, Stanley. All these are recruitment agencies, right? A lot of them specialize in finance recruitment also. They publish an annual salary survey, which they anonymously conduct with a lot of their clients every year. So this gives you a kind of trend as to how much is a CFO paid, how much is a manager paid, what is the salary sector wise, different level wise. You get a lot of those insights as well, which I used to use a lot when I was in a full-time CFO role. Are always available on LinkedIn. Feel free to reach out if you have any questions. Yeah, and hopefully we'll see you in one of our programs. One thing I would definitely recommend all of you to do is start learning wherever you want to learn it from, right? Start learning FP&A today. Automation will first come and hit rule-based jobs, right? Your automation, your AI tool will automatically post an accounting entry, will automatically do the monthly closing, but it cannot analyze certain things. It can, but not to an extent where there is human element involved as well, where there is business partnering involved as well. So make sure that you start, if you're in a rule-based work right now, you're an AP analyst, AR analyst, GL, accounting, consolidation, whatever, right? If you're in a rule-based work right now, start looking at analysis and business partnering right away, because automation will first come and hit rule-based jobs. Okay, remember this. Awesome. So I'm from Angola. How can I participate in the FP&A training? We, in fact, had a lot of students from Angola, by the way. So you can also talk to some of them. CGFP program is a 6-month training program. It's online on Zoom. So it is convenient. You can take it from your home. It's on a very convenient time zone. It is Saturday, 8 p.m. to 10 p.m. IST, which I believe Africa time zone should be somewhere around 4 p.m. to 6 p.m. IST, 4 p.m. to 6 p.m. Africa time. So on a Saturday. So you should be able to take it as well. Does that answer your question? So the brochure, the application link, the course page, everything is just pasted in the chat box. It is also available on our website, fpnaprofessionals.com. Let me just quickly paste that as well. So you can go through that, fill in the application, go through the brochure. If you have any questions, feel free to reach out to our academic counselors or Asif or me, right? And we're happy to help you. Asif and I have quit our high-paying CFO and FP&A leader jobs just to help our students become great at it. And we're loving this mission at this point in time. So many successful stories. The biggest satisfaction that we get is when our students come and tell us that we are able to implement this framework, or we are able to land a role because of this. We are able to help our students get interviews. So that's the ultimate satisfaction for us right now. Yes, Asif has shared the application link as well in the chat box. All right. Thanks, everyone. So we will all the very best for the rest of your week, and do stay in touch. Do connect with us on LinkedIn or follow us on LinkedIn. If you have any questions, feel free to reach out to us. All the very best for your finance careers. Thank you.
Thanks, everybody. Thanks.